Hello and welcome to another update video on Solana. Solana is moving deeper into our support area. The $109 level is still the key support level that I am watching. There is currently no strong evidence that a low has formed, I have to say. Unfortunately not. So, I mean, fortunately or unfortunately, I mean, it's not unexpected that we go lower. The idea was that we are likely going to see the $120 level. I only posted that. I only posted that a couple of days ago on X. CEO at 120. We're getting there now. Target nearly reached, I'd say. Not exactly 120, more like the 122 level there, the 61.8 retracement. So we'll see if the market actually gets there. I would assume that this is going to happen. Of course, I cannot promise it. I cannot guarantee it. For me, it's much rather important whether the bulls are going to turn up before we break below $109, because while the 1-2 setup or AB setup that I'm tracking is going to be valid as long as we are holding above the April low, the probabilities will already start to shift towards something more bearish if we are breaking below $109.78. Okay, so we have $109.78 as, you could say, warning level, and we have the level that formed here, or the low at around $95 as invalidation point. That is really the formal invalidation point. I'm not showing you the microstructures here on the daily time frame. We're going to take a look at the smaller time frame for that. But yeah, overall, we are still in a downtrend. That downtrend that started around the 14th of May. And I will have to change my preferred scenario. Preferred is, by the way, uptrend, upside continuation, because we have a 5-wave move up and a 3-wave move down. It's not 5 down yet. But I will have to change that to a more bearish interpretation if we see a decisive break, not necessarily a wick, but a decisive break below $109.78. I would have to change my perspective then. I would say let us take a look at the smaller time frame. Now let's take a look at the short term. Do I have it open? Yeah. So this is the short-term chart. Made a slight adjustment to the microstructures, not because we're going in the other direction, but because of the momentum of the downside move. It just indicates that we might still here be in an internal third wave. That also aligns it more with the Bitcoin chart and with other charts, like for example SUI, which looks a little better on the smaller time frame. They are now aligned, and so on. So I'm still tracking, and this is unchanged. I'm still tracking here potential WXY structure to the downside. I mean, we talked about that, where we have an ABC in the wave W. You know, the wave W bottomed on the 5th of June. We had a rally that ended as a corrective rally in 3 waves. And we're now potentially moving down in this Y wave, which again is a 3-wave move. Okay, so I've got, again, hold on. I've got here an A, B, C structure, circle A to circle C. So I actually need to, and I just see that now, I just noticed that now, I need to increase the wave degree by 1 here of this ABC structure, which makes it a little clearer. So this is what we're tracking here from this swing high on the 11th of June, a wave A to the downside. That was, for me, a 3-wave move. Then the B wave rally, also a 3-wave move, and now a C wave decline, which again is 1, 2. And I have to assume that we are still in the 3rd wave. I did already consider that wave 3 bottomed, but no, not with this momentum. So I have to assume we're still dealing with the C wave in wave 3. And I'm not sure if this might be another 1-2 setup here. So that means we could go quite a bit lower. But I will adjust the micro resistance area. That's always the best approach when we're in a 3rd wave. I always do this. We don't normally want to assume a 3rd wave is over or generally the trend is changing until we break above resistance. Or if we're in an uptrend, we don't want to assume the uptrend is over until we break below support, because 3rd waves can extend. So I normally always show resistance. Resistance hasn't broken, so still in this local downtrend. That means we're probably in wave C of 3. Not necessarily expecting a full turnaround at the $121 to $102 level, but I'm going to watch for reaction. maybe even a meaningful reaction from this zone. We have entered the target area, yeah? This is the target area we defined in addition to the broader support zone. The target area is based on the length of the wave W projected out to give us standard mathematical extensions for the Y wave. So Elliott wave tells us that typically this would be an area where the buyers have a chance to turn up. Does it guarantee it? Of course not. The main benefit of Elliott wave is not to tell us here will be a reversal. The main benefit is that this is an area we have to pay close attention to. But obviously, when we have momentum like that, I want to see some evidence first, right? I want to see some evidence. When we're looking at this, we know that there is a cluster of support here in this area between $121 and $122. But until I actually see a reaction, there is no low, okay? And then even if there is a low, the risk is this might just be a fourth wave bounce and we get another low. As long as we hold 109 and don't get a decisive break below the $109 level, the overall idea is we could still be in an overall bullish scenario. But the short-term momentum is clearly down, okay? That is very, very important to understand. The short-term momentum is down. So don't expect a reversal until we actually have some upside momentum. Now, it can be a strategy for some to try to catch the falling knife, but not blindly. The beauty of Elliott wave is that it gives us invalidation points, so we have clear levels against which we can measure our risk, which needs to be used to calculate the position size. So, just buying without a plan is the worst idea, and then afterwards asking, oh, where do I stop out? That needs to be defined, of course, before entering a trade. But essentially, your trading plan needs to tell you that. But as I always say, with Elliott wave, on our MCO Global channel, I made a video about how to trade with Elliott wave, few ideas. So it can be reasonable to buy pullbacks. But again, you have to make that decision based on your risk profile, and you have to calculate the position size like a pro. That those pullbacks, not everybody is up for it. Not everybody wants to take the heat because you have to be able to take some heat in a pullback. It's not always easy to trigger a buy order when the pullback is so sharp. Others like to wait for confirmation. Others like to choose a mixed approach, basically starting to accumulate a little bit, but only small because we are still in a downtrend. And then again, of course, measured carefully against the invalidation point, so you know when you want to get out, and then scaling up the trade when we start to move up. I think this is an opportunity, but I'm not there. I'm not ready to confirm a low here yet, okay? So the area I'm going to watch next here is 121 to 122. That is the update on Solana. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, don't forget that today at 5 p.m. UTC, we've got our member live stream. You can easily join it by joining our membership. The link is already communicated. I'm going to I'm going to answer all the questions. I can never answer all requests, but typically I manage to cover around 40 to 50 coins. After that, the energy is just gone. But yeah, there are plenty of coins we're going to cover today, probably some broken setups. We have to take a look at those, but that just means basically the charts are bearish if they are broken. And then, yeah, we are taking a look at the ones that still have chance, and Bitcoin remains the leading chart anyway. So I'll keep you updated. Join the conversation if you want to. If we don't see each other in the live, then I wish you already a great start to the new week. Thanks so much. Bye-bye.